Hey, it's David Krushinsky here from DK Home Loans. Thank you so much for watching this video. Today I just want to go over our pre-qual cost illustration form that's meant to provide you meaningful information before you're under contract on purchasing a home. Now, this is not a good faith estimate. This is not a loan estimate. This isn't anything official. This is just to give you a basic understanding of what to expect during the home buying process. Now, we're going to talk about monthly payments. We're going to talk about estimated closing costs. So I'm going to show you the form that we use that will help you understand, because there's so many numbers on here. People get very, very confused easily. So I want to break this down for you so it's easier for you to understand, because we use this quite a bit. If you're looking at 10 different properties, we might work up these options for you. I want to make sure that you can fully understand this form and don't have any questions. So let's get right into it. Here's the form, and if you notice at the very top right here, it's going to show you the estimated sales price. Now, this is just a sample, so we're looking at a $350,000 sales price, and this particular scenario is actually an FHA loan with a 3.5% down payment. Now, you wouldn't really know that by the loan amount, because the loan amount increases by 1.75%, whereas when you have a conventional loan, that doesn't happen, but this happens on an FHA and a VA loan. And you can tell that right down here where you look at FHA, VA upfront, MI. This shows the amount which gets added to your base loan amount to give you your final loan amount. So we'll just work our way down here. This is showing you the rate as 5.99%. The loan to value is 98.19. That's because the extra 1.75% is added to the 96.5. We have a 360 month loan term, which is a 30-year fixed. The mortgage insurance, if you have mortgage insurance, would be right here, which is 0.55%. This is a purchase, single family residence, owner occupied. It does include impounds. Now, you don't have to include impounds. You can waive those where you pay your own taxes and your own insurance. And then there's no prepayment penalty or anything like that. So let's look at these fees. All the fees that are on the left-hand side under approximate non-recurring closing costs are the estimated fees that you'll have for your loan. These are just estimates right now. These fees could change, but this is what we're kind of giving you as an estimate. Obviously, we don't know who the escrow company is yet. We don't know certain aspects. You might be self-employed and might not need a verification fee. You might not need $150 for your credit report. This is just to give you more of a general idea of what the estimated costs are. So you can look at the costs right here. We estimate these at $5,085. Once again, your upfront mortgage insurance premium is right here if you have one. And in Arizona, typically the seller pays the owner's title policy, so we highlight that with a 0 on this particular instance right here. So we're going to move right over to the right-hand side of the column where it says approximate monthly payment. This is your principal and interest. This is your secondary financing. If you have a second mortgage, that would be under there. Here's the estimated homeowner's insurance at $85 per month. That is just your homeowner's insurance policy divided by 12. So if your homeowner's insurance policy costs $1,200 a year, that would be $100. If it costs $2,400 a year, that would be $200. So right now we're just estimating that. Estimated property taxes, these are going to change with every different property because each different property has different property taxes associated with it. So right now we would just be estimating these. And the mortgage insurance was right over here where we showed you that a little earlier. So total approximate monthly housing expenses, $24.1771. Now, if you have a homeowners association, you will pay your dues separately, but we will still factor those in as part of your qualifying payment. You will pay them separate though. So some of them are billed quarterly, some are billed annually. It just depends on if there's an HOA. If there was no HOA, you would never have to pay these. Now, this is a newer column in here that we just added because the 2-1 buy down has been so popular. What we're trying to illustrate here is if you did a 2-1 buy down, in this case, your starting payment would be $19.98 instead of $24.17. Your second year payment would be $22.02.15. Now, this is because the seller is paying the portion of your 2-1 buy down. So 2-1 means that 2% lower the first year, 1% lower the second year, meaning that you're at 3.999 to start out. then 4.99, and here we're illustrating what the monthly payment is, and here we're illustrating what the cost to the seller would be. So 76, 23, 26 to buy that. This is really great. I mean, it shows you can get a $350,000 house right now for under $2,000 a month. Now the next box is approximate prepaid expenses. So this number right here, prepaid interest, we're showing you 15 days worth of interest. You might close at the end of the month. So let's say you close out on March 31st. You're only paying 1 day of interest, but that's going to be much cheaper than $847. So when people say, what are my closing costs? It really depends on a number of factors. It depends on when you close. It depends on if there's HOA transfer fees, if there's not. If you're funding anything like in Sun City, they have the recreational fee, and they also have a capital preservation fee. So different communities are going to have different closing costs, but we're going to do our best to try and illustrate those for you. Right here, we're showing property taxes at 3 months, and that is due to the fact that Maricopa County collects property taxes semi-annually, meaning twice a year. And so you pay for a certain amount up front depending on when you're going to close. So let's say that your property taxes are due in October, but you're closing in August. So they might only collect a couple months for that, because you're going to be only making one payment before the taxes come due, but you'll have owned the property for 3 months. So they might collect 4 months in that case, or same with homeowners insurance here. You can see we're collecting 15 months, but that's because if you close in March, your first payment isn't due until May. And that means you're only going to make 10 payments until next March. So they collect a couple months of cushion to make sure that there's enough money in your homeowner's insurance escrow account to pay for next year's premium when it comes due, because you won't have made 12 full payments. So the prepaid expenses are $24.67. And so what we're going to do is we're going to add both the closing costs and the prepaid expenses, and that's going to equal your total settlement charges or total closing costs A plus B, which is $75.52. So if you look at the approximate cash to close, you're factoring in your down payment, $12,250 for FHA's 3.5%. You're factoring in your closing costs at $75.52. And then let's just say hypothetically the seller's given you $5,000 towards your closing cost. Your total funds needed to close are $14,802.24. Now, your appraisal fee is paid up front, so that'll come off of there. And then any earnest money that you have would come off of there as well. So earnest money is where your pledge to the seller that you're meaning to fulfill the contract that you sent in. So you'll say, let's say earnest money was $3,000, you would have to come in with $11,802. And so I hope this has been helpful for you. Like I said, I wanted to do a quick video that will break this down for you, because there's a lot of numbers. If you have specific questions after you watch this video, let me know. Let's get on a phone call. I'm happy to help out. Thank you so much. Have a great day.